Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, October 19th, 2010. Well, the markets are lower today, but dramatically off the lows of the day. Again, POMO, Permanent Open Market Operations, coming to the rescue today in the term of $6 billion or so being floated into the market to prop the market up off the lows of the day. You would have thought today could have been a major down day because the dollar was ripping higher. Why was the dollar ripping higher this morning? Because China raised interest rates. Now, when you raise interest rates in China, essentially it powers the dollar higher as it's tied to the US dollar. Remember, you have to look at the big picture here. China basically, in my opinion, saying a little bit of an FU to the US. US been calling China a manipulator of currencies out there and yelling at China saying, you guys got to let your currency float. China says, you know what? You guys are the real manipulator of currencies, as the Federal Reserve has a weak dollar policy, printing trillions of dollars to weaken it on purpose. Who's the bigger currency manipulator? That's the big question. I think it's up in the air really to gauge which one is the bigger currency manipulator. And ultimately China saying, you know what? You guys are going to call us this. I think I'm going to do something here. I'm going to raise interest rates. They raise interest rates all of a sudden right in the face of the Federal Reserve, a big pie, cream pie in the face of the Fed as the dollar rips higher today, causing the markets to collapse. All right. Now, again, you can see the dollar right here. The Federal Reserve is fighting back, pushing the dollar down right now back to the lows of the day. Here's the low of the day. We just tagged the low of the day on the intraday UUP chart, which is the dollar chart here that we refer to. So again, that is helping keep the markets off the lows of the day. In addition, POMO, Permanent Open Market Operations, as I mentioned, it is seen, and you can find it on the New York Fed's website when they do this. And this is, again, propping of the markets 101. And again, if you saw the dollar up 27 cents on the UUP and you saw Apple's earnings and IBM's earnings, this market probably should be down 200 points at least. Instead, the Dow is just down about 100 points right now. NASDAQ is down 24, and the S&P 500 is just down 10, really about 1%. 1% drop, that's about it, folks, which in the scheme of things, that's what we've been up in the last day or so, so it's not that big of a deal. If we go back to the SPY again, take a look. The market's again pushing through. You'll have a little resistance at the 20 moving average if you get over this green trend line. Green trend line right now working beautifully, as well as the 200 moving average. Notice today the gap down was dramatic. This is when the dollar really was opening at the highs before POMO came in. POMO, for some reason, always comes in around 10 o'clock, 10 a.m. Eastern time. So notice how the selling took us into the 10 o'clock time frame. In addition, we hit a double bottom. I want you guys to see this. Double bottom from the last week's lows. If you take a look, this is, I believe, Thursday and Friday's lows, and you tested that today. I announced it in the intraday stock chat that was most likely going to be the low of the day, and so far I was dead on. So good call in the intraday stock chat. Of course, we scalped this here for a beautiful gain. Look at the move on the markets here, and we jumped in right here on the Pierce. I called out a low level of 116.75 to 116.85 as being the key level that you were going to look to accumulate the SPY today. Guess what the low of the day was? 116.76, 1 penny from my low of the range I gave. We all jumped in and rode this thing up. I took about 15 cents on the first half and 20 cents on the second half of my position, and it continued up. We're actually $1 off the lows now, believe it or not, on the SPY. Dramatic move higher. The low of the day being put in right here as the dollar has come off the highs of the day just slightly as the Federal Reserve is fighting back against China. Can anyone say currency war? I sure can here as we continue to see this action. Geithner again calling them manipulators more and more harshly, and China saying, you know what, take this. You guys want to have a cheap currency? Well, we're going to make it harder for you by doing this one action. All right, let's go over a couple other things. First of all, let's take a look. We talked about the lows of the day down here. That was a great little move. The market rallied up to the 200 moving average, pulled back, hit the green trend line, pulled back, pierced the green trend line, pulled back. Now surging through the green trend line, piercing the 20 moving average as, again, the market is fighting back. Can anyone say, again, POMO, Permanent Open Market Operations, as the Federal Reserve is not willing to let this market go down at all? They want to keep this thing up, even in the face of what China did. They are trying to push this market higher, and they are succeeding, only down 78 cents now. We are now down less than 100 points on the Dow. Dow is only down 93 points, folks. Unbelievable saving here in the markets going on. And again, you have to ask yourself, is this a legitimate market? Is it actually a real market anymore? And the answer is no. Ultimately, when volume comes in a major way, there will be a turning point where they can't stop what will happen. But right now, they are stopping what's happening by floating the markets up, continuing with their actions that they're doing. Weak dollar policy is propping the markets. POMO is propping the markets. And again, whatever they have to do to keep this market up. Remember, if the Federal Reserve makes everyone believe there's a recovery, their philosophy is there will be a recovery. Why? Because you get people to go out and spend money again, creating a recovery. Does it work in the long run? In my opinion, not one bit, because ultimately you still got to pay off your credit card. You're just creating a more debt situation as people don't have money to spend right now. Their houses are down far below their levels that they initially bought them at. It's just a catastrophe waiting to happen. But what it will do is delay it for a couple years, and I think that's the goal here. Push it off a few years, try and get a recovery here. At least that's what the Fed thinks. I don't think it's going to work, though. I think in 2 years, 3 years from now, you're going to be looking at hyperinflation and little to no growth at all, and we'll be basically with 10% unemployment, 17% as we do have now, real unemployment. Okay, let's go back to a couple other charts. What else is moving today? What are the strong stocks today? This morning, again, we had Apple reporting earnings after the bell yesterday. Let me just punch up that chart here. AAPL is the chart, and again, you can see the stock opened lower, touched 300 after hours yesterday, was trading as low as $2.98, but it so far has recovered at only down about $6.40. So good recovery on Apple Computer. In addition, IBM, take a look at this. IBM opened down here and has moved dramatically off those lows as well, although it still is down about $4.32. This morning, Goldman Sachs reported. Goldman having good earnings, beating earnings estimates. The bar was pretty low on Goldman. How do you know the bar was low on Goldman? Because look at this chart. It's at the low end of the chart as opposed to IBM. If you take a look at IBM's chart, look at this. This is all up into earnings. Well, no brainer, it's going to come back. I mean, just think of it in terms of running all the way up, and then the earnings are going to have to be so unbelievable that you probably wouldn't believe them anyways. That wasn't going to happen. The stock correcting a little bit bad down right to the 20 moving average. That's your buy point this morning. I talked about that in the intraday stock chat as well. GLD was another one that fell down to the 20 moving average. I called it as a buy. Look at this, folks. If I zoom in, there's your 20 moving average. You gap down there, and the GLD, again, still down $3, but it's moved off the 20 moving average. First hit of the 20 on the GLD. Beautiful little move there. All right, many other charts out there. In addition, not only did Goldman Sachs report earnings that were solid, and you can see the move up here, but Bank of America did not freak the markets out that much. All right, yes, it's not up much. They did report earnings, but overall, not horrible overall, and the stock is hovering positive. So financials overall, Wells Fargo, take a look, up 27 cents today. JP Morgan, up 31 cents. Great move on JP Morgan today as well, on the back of some ugly mess last week. The financials are carrying this market up. And again, you are seeing buying going in the NASDAQ 100 stocks, lifting those as well. As I said, Apple was as low as 300 this morning, now at 312. Baidu just down $1.60. Google just down $5-6. Chevron is lower on the day, down $1.35, as Exxon's down about 81 cents. But even Exxon's had a big move off the lows. Here you have a chart here. Let me go to the intraday. Look at that pop on Exxon. Little buy program hit right there. And now you're consolidating in a bullish manner off that chart. Really a tremendous day, folks. It's these type of days that I love in the markets. Yes, it's kind of strange to see the manipulation that goes on, the dollar manipulation, the China fighting the dollar manipulation and saying, you know, F you to the U.S. and so forth. Currency wars going on left and right. But it's up to us as traders to trade this, and that's what we do here. Bottom line is you can swing trade this market. I don't care how much manipulation it is in this market. There should be swing trades available each and every day to position yourselves for a few days to make use of it. You just have to factor in the manipulation. And again, you want to join the Research Center 100% on. That's where you're going to find this education, these swing trades, the analysis of the markets, dollar, gold, oil. All of that's in the Research Center at InTheMoneyStocks.com. Get on board now. In addition to intraday stock chat, if you want to get on board and really learn intraday analysis and up your analysis techniques yourself, the intraday stock chat is for you. All right, folks, a great day today, fun day today. We will talk more about it in the nightly video tonight in the Research Center when I cover that for our premium members in that Research Center. Talk to you then, folks, and enjoy the rest of the day. Take care.